So to answer your question, Shalina, in terms of what expenses you can claim as a business, like I said, it's wholly and exclusively. For directors, it's wholly, exclusively, and necessarily. So what's the expense necessary? So as an example, you're a director of a company and you're traveling from Peterborough to King's Cross, for example, and you get a train ticket. If you take a first class ticket, was that expense necessary? Yeah? Can you justify it? If you can, yes. If you can't, then you can't claim. Yeah? So the test for a director to claim an expense is higher than it is for a sole trader, because our friend over here would just have to meet the wholly and exclusively rule. Shalina, you'd have to ensure the expense was also necessary. Does that make sense? So the test is higher. So you're better off having a sole trader business as well, and run through some expenditure through that particular business, because a sole trader gives you more flexibility, easy to run, easy to manage. A limited company has a lot of rules and regulations, and you've got company law, and it's quite easy to breach the rules. So for example, you may take money from your company, and you may not take it as a salary, as a dividend. So at the end of the tax year, or at the end of your accounting year, you've taken out £40,000. Now, if that's not a salary or a dividend or a bonus, then you have to pay your company interest for borrowing those funds. If you don't, then you have to file a P11D, because it's a benefit in kind, which we talked about earlier. Does that make sense? Okay. On top of that, I'll come to you in a second, James. On top of that, if 9 months after the year end, you haven't paid the 40,000 back to your company, you have to pay Section 455 tax at 33.5%. So 33.75%. Yeah? So a lot of small business owners sometimes lose sight of the fact that a limited company is a separate legal entity, because they think it's my business, I do as I please, and I take money when I want to take money because it's my money. It is and it isn't, because it's a separate legal entity. You have to treat it as though you're working for somebody else. So you can't just put your hand in the bank account or the till to take cash out. You've got to make sure it's recorded properly. Just to finish this off, if you then repay the £40,000 back to your company in a subsequent year, you get the tax back. So that's just one example for you of the flexibility a sole trader has over a limited company. So Shalina, has that answered your question as well? Unless it's a bit broad, but it's difficult for me to give you a list of 84 things. There aren't 84 things. You can claim anything as long as you meet the test, yeah? Are you happy with that as well? Yeah. James?
Just on that question, does that work the other way around as well? Because with a property company, most of my companies owe me money initially.
Yeah.
So am I obligated to charge interest on that? And I suppose that could be money I get paid by my company.
We're going to ask the room. So James is saying, when you borrow money from your company, you have to pay interest, or if you don't, you have to. It's a benefit in kind. James is saying, when it's the opposite, when he loans money to his company, should he and does he have to charge interest? Does anybody have a view on that?
He should do.
Yeah. He can do, he should do.
Well, he can do.
Okay.
It doesn't have to.
Yeah.
Can be zero. He's still charging, but zero.
So our friend over here says you can charge interest, but it should be 0%. Okay.
It doesn't have to be zero, but it could be anything from zero up to whatever you want.
Okay.
But I would have thought it can't be more than a reasonable amount. So you can't charge 50% when normal interest rates
it would be
are
somewhere
3%.
between 5 and 10%. I'm just working out if there's any advantage to doing so in certain situations.
There is. Okay. Sorry?
No, I'm going to say, if you do give interest, then you will obviously take them out.
Okay, so James, everybody in the room here who's a basic rate taxpayer has something called a personal savings allowance, which means you can earn up to £1,000 from savings income tax-free. Okay? For our purposes, let's just call it bank interest. So if you're a basic rate taxpayer, you can get £1,000 worth of interest income tax-free, so long as you don't have any other savings income. If you're a high rate taxpayer, £500, and high rate means anywhere from 50,000 up to 150,000, and when you go over 150,000, you get nothing. So that might mean you may want to charge some interest.
Yeah, so you can charge £83 a month without any consequence.
Yeah, but if you charge interest to your company, the company has to file a CT61 and withhold 20% tax from you and pass it to HMRC, but you get it back when you file your tax return, whenever you file that before the 31st January in the following tax year. Okay?
Thank you.
On top of this, you've got something else called your starting rates savings allowance, okay, which is similar to this, and that's £5,000. And you get this if your income is below, I think it's 17,570. So so the personal allowance is 12,570. If you don't have any other income, you can earn another £5,000 in savings income, which takes you to 17,570. For every pound you go over the personal allowance, you lose a pound of this. So if this were to become an extra £1,000, so 13,570, this becomes £4,000. So this kind of stops when your income goes to 17,570. Does that make sense? So let's run an example for you, James. How much? Let's say you're taking a very small salary of.
I'm drawing exactly 12,540 at the moment, so I update this in April.
So we're going to make it even easier. How much money have you loaned to your company?
About 200,000.
200,000. Okay. And what rate of interest are you going to charge?
Average would be 5% or so.
5%. Anybody in the room have a view on James charging 5%?
Charge more.
Charge more. How much?
10%.
10%.
Could
So-
it be challenged by being reasonable or unreasonable?
I love that word, by the way. Okay? Reasonable. 5%, we're going to come on to you in a second, my friend.
Might not depend on your other earnings as well, with brackets and thresholds and stuff.
Okay, that's a good observation. So we'll keep you in the question mark bracket for now. Anybody else? Okay, can you define the word reasonable to all of us?
What is currently happening in the marketplace? The current interest rates are what, 1-2%?
Yes?
So if you're charging 5, you might just about get away with it. At 10%, I would say that that's probably an excessive interest rate. And the taxman may say that you're trying to overinflate your expenses.
Who's going to say that, by the way?
The taxman could argue that you're overinflating your expenses or your costs.
The 10% is
Bridging is 18 to 20%, our friend says over here.
If it's a short-term loan, fine.
Yeah?
10% is the normal rate I would charge anyone else for lending money.
Okay, so how do you think we're going to figure out what rate James can charge and it's reasonable? You and I are going to do an exercise together, my friend. Okay? So,
You have to charge over 20%.
Kieran, your sticky tape isn't working, my friend, so. Ramsan, my friend, you're going to have to come up here and hold this for the next hour and 5 minutes, by the way. Aren't you glad you came? So, you and I go to your bank manager and say we would like a loan for £200,000. Okay, what's one of the first things they're going to ask us apart from our income?
What's any debts?
And okay, apart from that, in terms of how long? Okay, length. Yep. Anything else that they want in return for giving you a loan? Security. And thank you very much. Okay. And then, because it's a limited company, if the company goes bust, are they going to be at the top of the people to be paid or right at the bottom? Top or bottom? Do banks get paid first or do banks get paid last when you go bust? Yeah, so near the top, yeah? So they become a preferential creditor, yeah? So we go to your bank, sir, and say, we want to borrow £200,000, okay? We're not going to give you any security, but you're a really honest man, and you've known the bank for a long time, and you've never ever cheated anybody, and you always make your repayments.
Yeah.
That's what you tell the bank manager. You then tell him, I'm going to borrow the money for 60 months, okay? But I'm not going to make monthly repayments. But again, you've told him you're a really honest man, you always make repayments, okay, all that kind of stuff, okay? And you're going to tell him, if you go bust, they're not going to get paid first. However, you've never gone bust, and you don't intend to go bust, so you're going to be okay. So they can't have any security, no monthly repayments, and if you go bust, they don't get paid first or second. What rate of interest is your bank manager going to charge you as something reasonable?
High.
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 Yeah, very high. The risk.
What do you reckon?
That could be 10%. I don't know what the market
Market-
rate
That
is.
could be 10%.
More, 25 something. The credit cards are charging over 20%.
Yeah.
Every
So,
single credit card.
what do you think his bank manager is going to say to him or do to him?
Oh, he will say no. Get lost, that's the door.
Get lost, there's the door.
Yeah.
And he's being polite, by the way. James, so you need to think about these things. And then our friend over there made a very good observation. It depends on your other income. Okay? So now let's try and work this out. So you've loaned £200,000. Let's say
In terms of the income of the bank itself, it's the tax threshold at the moment, and I'll always keep to that.
yeah. Now I don't remember the exact number in terms of how much income you take out without paying national insurance. I think it's £672 a month.
It's been equalised now, so it's the same as the
Yeah. No.
So I think
No.
533,
Yeah.
which is
That's right.
right underneath the
Yeah. So wait.
I'm doing something like
933, yeah.
Let's call it £600 for our purposes today. That's not the exact figure, but let's say it's £600. So James, you're taking £600 a month times 12 months. That gives you 7,200. Yeah. Are you paying any tax or NIC? No. Okay. So I need someone to help me out here. So if someone works out 12,570 minus 7,200. James, I knew you were a spreadsheet genius. What's the figure?
5370.
5,370, okay? So you can take this as interest and not pay any tax because you're below your personal allowance, yeah? Now you haven't got any other income, so you've got your personal savings allowance of £1,000. So we're going to underline, okay, just put a box here so we know what we're doing. Box here, okay? Then you've got your starting rate savings. This should be in the other order, by the way, but okay. 5,000, okay, which gets you to 18,570, yeah? But you would claim this first and then you'd claim this. So you can charge 5, 6, 11, 376 in interest to your company and not pay any tax. If this situation applies to you, yeah? Your company then claims that as an expense and gets 19% corporation tax relief, so you've got best part of another £2,000 on top in terms of tax savings, yeah?
Mine personally, when it comes to me, am I paying tax on the extra 6,000 over and above the basic?
No, you're not. You're not, because you've got your starting rate savings allowance, okay? As long as you stay below 18,570 before we take this, 17,570, no tax to pay.
So pretty much all.
This is tax-free, this is tax-free, and this is tax-free. Yeah?
And draw £18,000.
But you can't have any other income, apart from your £2,000 tax-free dividend. So you can take that as well. That gets you to, that gives you another £2,000, so you'll have 20,570, and you've not paid a single penny in tax so far. How does that sound?
That sounds much better than 12,000.
Are you glad you came?
Absolutely.
Good.
Always good to-
Okay, that's you done then, James, yeah?
Okay.
Sorted. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.